Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, September 26, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, the title or thumbnail of last night's video was Moving Day Coming. Well, today could have been moving day. In fact, they had a gap higher open only to crap out, fill the gap, and bounce back up. However, they were up about 45 points in the futures when we woke up this morning. Here's a pre-market chart, or includes the pre-market activity. And you can see here that there was a gap higher open at 4 a.m. And when you go to the regular hours, here's the gap higher open. The opening print today was 574.40. And as you can see from the daily chart, closing print today was 572.30, yet still up $2.26 in the spiders. That equals a gain of about 0.4%. So it's a decent up day nonetheless. We're going to take it at face value and still say she's above all the moving averages, the trend is your friend, and she's still, in a sense, feeling things out but eating time off the clock near the former highs and around the current highs. There's a picture of the weekly chart. As you can see, she hasn't really got very far this week. The weekly candle is a very narrow ranging candle. As you can look back on the weekly chart, and you don't see a lot of candles that have a high and a low of this narrow of a range. Doesn't mean it'll finish like that. Anything can happen on Friday, but I'm just saying as it stands right now, there's no material change on the chart from yesterday to today, from Monday to Thursday. There's really no material change. Be that as it may, let's take a look around things and see what happened today, for example, in the live room. We'll throw the ball around the horn a little bit, look at some other charts. Like, for example, gold futures. Talked about it in the live room. We have some members that like to trade silver futures, gold futures, other metal futures charts, other metal futures markets, if you will. We had other numbers up here today, but this was the bottom line today. These were the last two numbers on the board, 2680.1, 2677.9. How about that bounce? How you doing? Did we have participation in the live room? And the answer is yes, we did. If you were one of those participants, post it under the video in the comments section, please. Help traders out that are looking for answers. They're looking for a place they can learn and make money and both be effective. May not be sexy, but how about TLT? What are the numbers today in TLT? 97.60, 97.35. They're close together. That was a zone. Traders bought that. They got the bounce back. Look at this test. Low in this candle. 97.60 on the nuts. Guess what? 97.60 was important. Anybody want to dispute that? Go ahead and put a card in the complaint box. Anybody see anything familiar here right out of the course? Lazy E-mini trader. If you took the course, you'll see it as clear as day. Got some kind of a sign or signal of a trend change, on time type of situation. Funny how these things work. Let me ask a question to the masses out there. Let's see what your comments are under the video. Let me know what you think. If the Fed told us they were going to lower interest rates, change policy, and then they did that thing, and then they've told us that they're going to continue changing policy, they might have hinted that they were a little bit late and could have lowered rates earlier. They've also told us they're going to continue on this changed policy. So what would you expect rates to do from here? Go higher or go lower? If the answer is go lower, then what would you expect the price of bonds to do? And they do work the inverse of interest rates. So the price of interest rates going lower would support higher bond prices. TLT are bonds. It's an exchange-traded product that supposedly has 20-year plus bonds in them. So if the rates are coming down, then the price of bonds would be going up. It's one of those Are you really going to fight the Fed type of situations? Just food for thought. Might want to chew on that one for a while, write it down on a sticky note, put it on your desk, look at it every now and again and see if I'm right. I get asked all the time about Bitcoin, what's the target, what's support, what's resistance, all that stuff. As long as they stay above 63,175, I think we talked about this either in the live room or I brought it up in a video. Maybe it was a live room. But there is a target up above. Doesn't have to be the end-all, be-all. It's just the next target. In other words, it's where they're headed as long as they don't get back below and stay below 63,175. Do you want to know that number? What is that number? Get out your sticky notes. I'll even give you a little zone out of it. How about 66,775 to 67,220? It's a zone. It's an automagical calculator type of situation. And it's what I believe they're headed to as long as they stay above 63,175. Doesn't have to be the end of the run. A target is the next place that the bulls are headed to. BTC USD. About GDX, we have a lot of traders in the live room that like to trade GDX. I rarely ever talk about it in these videos. Here's GDX. So $39.97 plus shipping and handling is a number that they need to stay above to make this happen. And they're close already, but might as well talk about it while they're getting close. 42.25 is the near-term target. 42.85 is the next target above that. These are targets. They are not necessarily the end of a run. They can be. Price can react there. They don't have to. Targets are on the bull side, the next place the bulls are intent to get to. 42.25 to 42.85. Either one of those numbers, they're both important, can stop price from going higher. And they should at least get to 42.25. Here's the HGX, Philadelphia Housing Sector Index. Why am I bringing this up? To have another discussion similar to the one we had last night about the bond market, interest rates, the stock market being at an all-time high, Fed lowering interest rates while the stock market's at an all-time high. One of the reasons would be, well, people can't afford to buy houses because interest rates are too high. They need to relieve some of the pressure, so let's lower interest rates. But that doesn't seem to be the case because the Philadelphia Housing Sector Index is also at a high. Here's a monthly chart. You can see it's at a high. It doesn't matter what chart you look at. They are at a high. So there's no reason that anybody can point to in terms of interest rates sinking the housing sector. So that didn't happen. So once again, somebody put some comments. Let me know what you think. Why would the Fed lower interest rates while stock market, housing sector's at a high, stock market's at a high? What are they trying to do? What's their reasoning behind lowering interest rates? What do you think? What happened inside the numbers today? We're going to check out the commentary. I'm going to point out a few important things. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. Be the double checker. At this time, the ES, or the futures, were up about 45 or 50 handles. So it was moving day as opposed to another narrow day eating time off the clock. So we started out moving day. That was the thumbnail in last night's video, so I reiterated that here. We had some numbers on the upside they never reached. 576.65, might want to jot that down. 575 is a big fat round number, might want to jot that down. They didn't reach that either. Former high was 572.88. Above that high is the most bullish case for some of these higher numbers. Below 572.88, 571.90, and then 571.10 as a just-in-caser. Those are important numbers. Now, those two are on the board at 0 dark 30. 571.90 and then 571.10. 5-minute chart, right of the vertical is today's activity. 571.90, 571.10, the two blue lines. Here's where they opened them. You can see what happened. They collapsed right out of the gate. Where? Right into that zone, bounced them out of that zone, at least for a trade and from a trading perspective. If you bought one, bought the other, your average is in the middle, they gave you the trade. Later on, they came down to fill the gap. That's also on the board. If you're going to pause the video and read the notes, you'll see where that comes in as well. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here each and every day. The numbers, the commentary, the experience, the science, the art form, all of the above. It's all in here each and every day. Everything I just showed you is in these notes, the commentary in slow motion as time goes on. Giving you the thing before it happens, and then as it's happening, we're reiterating the thing that is happening, where support is, where resistance is, where the important numbers are. There's the same numbers. I adjusted by a nickel. It doesn't count. And then check this out. You see at 11:30, check this out. If above 571.10, then they get back to 571.85, and if above that, back toward the former high. These numbers are still valid, and what you could see at the end of the day, they did precisely that. They almost got back to, and here's the high. The high in the afternoon was 572.75, not 88, but they definitely made the attempt. We have a pretty good handle on how the market works. This was the gap, 570. If they start closing candles below the gap, then it's a full-on gap and crap, and the door opens for 568.30. They didn't do that, though. They just basically filled the gap. The low was 569.90. The gap was officially 570 even, as they say in the trading parlance, on the nuts. We did have a small bucket full of stocks on the move today. Nothing earth-shattering. Hershey didn't hit its number. CarMax didn't hit its number. But USO jumped the first number. Let's go see what happened in USO. This is the proxy, one of the proxies for crude oil. There's USO. Here's a 5-minute chart. So the first number of the day was 69.30. You could see here right of the vertical is today's activity. They opened below. They tried to recapture it. The high is exactly 69.30. And by the way, had I mentioned there are no accidents, no coincidences across the market complex. Everything is for a purpose. Nothing is by accident. When an equity, a stock, a market opens below a number, we discard that number and we look to the next number. What's the next number in USO? Well, it was 68.57. Low of day happened to be 68.60 on the nuts. Unfortunately, the nut was down at 68.57 in USO. As soon as they hit that, you could see what happened. They ripped it back up in the other direction. That was the trade, 3 cents short. Sometimes they come up short. Other times they spike them through, splitting hairs over pennies, as I like to say. What's going on over in Camp IWM? 221.13 was the gap left open on Tuesday. Today's high, what was it? 221.13. No accidents or coincidences. They filled the gap, and you can see what happened. They had what's called a gap and a crap. They never got to the gap left open yesterday, but they certainly crapped out from the opening print. Most of the day, all day, they put in a bearish, flaggish. Last few minutes of the day, last hourly candle of the day, they started the trek lower if that's going to happen. All in all, we have to be the umpire calling balls and strikes. The IWM had relative strength today, all said and done, against the S&P, up 0.5% at the end of the day. When you look at the chart, the visual says gap and crap. When you look at the end of the day, you're up 0.5%. Not bad, up $1.16. Okay, I'll take that. Move it along. That's if you're a bull, if you're long. It's just a matter of how you want to look at things. What about the folks down at the transportation department? Same routine. Gap and crap situation, hourly chart. Here's the daily chart. But yet they're above the trend line. That's the most important thing. What did they do today? They ran a test of what? The high, or at least in the vicinity / neighborhood of the high of the breakdown candle that we've been discussing for a few days. Funny how that works. Not really. There are no accidents nor coincidences. These are all part and parcel of the things I teach of how the market works. How about the Qs? What's going on with the Q people? You see what's going on here. Closing print yesterday, 485.82. Low today, 485.80. Filled the gap, bounced off of it. Thank you very much. Same routine. You could say it was a gap and crap, but all they did was come back, fill the gap, bounce off of it, finish up about 0.7% or $3.65 on the day, 0.75%. What's wrong with that? From a bull perspective, that's a float higher. That's bullish. There's nothing wrong with this tape. They're above all the moving averages. The trend is your friend. The intraday activity does not really matter at the end of the day. It's the closing print that matters at the end of the day, not just in the Qs, but across all market complexes. What about the financials in the XLF? Up 23 cents, 0.5%. Anything wrong here? Still need to get back above to kind of confirm the uptrend is fully entrenched. Get back above that 20-period moving average. They're knocking on the door. They're hovering. They're riding it. We're just going to take it at face value and say we're up 0.5% today along with everything else, and we'll just move it along. No material change in the XLF. About Smashmouth, SMH, up large today. 2.88%, $7. They were up more earlier. Came down, never filled the gap, bounced back up, but finished up really, really nicely on the day from a bull perspective, up almost 3%. You have to raise an eyebrow. You have to heed that and say that's a proxy for the tech space. Doing fine on the back of Micron and others. Micron had a pop after market yesterday. We took a look at it. But then again, we're the umpire calling balls and strikes. All that's true stuff. But let's look at it from the other side as well. What's the most important price on the board relative to where we are? About 253.32. Why is that? Well, guess what? It's the high over here. So market ran up and was rejected. Market gapped above that today, came back inside of it. Now, if she came back up and closed above it, that's fine. That's bullish. If she gets above and closes above it tomorrow, that's fine. That's bullish. But if she can't, CAN''T, get above, stay above that number, 253.32, then that's going to be a problem because she won't be able to get above that high. That won't be bullish. That will be bearish. That will be a rejection and a potential double top over here. We don't know which one it is yet. We're just laying it out, giving you both sides of the scenario. Or is it scenario? We don't know. We don't care. Giving you both sides of the coin. We're the umpire calling balls and strikes. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.